Welcome to Cedrus Lens. Markets move every day, but not every move matters. Each week, we try and bring you the ideas, trends, and global developments that can shape investment decisions, not just for today, but for the years ahead. This week, the market surprised many investors. Despite all the geopolitical uncertainty we've seen over the past few weeks, the Nifty rallied about 1.6%. At first glance, it looks like confidence has returned. But here's the interesting part. I don't think the market is saying everything is fine. The market is probably just saying the biggest risk has changed. And that is an important distinction. The immediate trigger was quite straightforward. Tensions in the Middle East eased, crude oil prices corrected sharply, almost 20% from their recent highs. For an economy like India, that's significant. Lower oil prices mean lower inflationary pressures, less stress on the current account, and potentially more room for consumers to spend elsewhere. So the rally we're seeing looks more like a relief rally than a complete change in the market's outlook. In fact, I think the market's attention is quietly shifting elsewhere, and that's the Indian monsoon. We're currently seeing a rainfall deficit of over 40% in several regions. Now, every year we hear discussions about the monsoon, but this isn't just about agriculture anymore. A weak monsoon affects rural incomes. Rural incomes affect consumption. Consumption drives a very large part of India's economic growth, which means something that starts in our farms eventually shows up in corporate earnings, banking credit, FMCG sales, auto demand, even GDP growth. Having said that, there's one reason why the Indian market continues to remain remarkably resilient: domestic investors. Even though foreign investors have continued to sell in phases, domestic SIP flows and long-term investments have absorbed a large part of the pressure. This is a structural change compared to a decade ago. That doesn't eliminate volatility, but it certainly changes the market's ability to recover from it. So as we enter the coming week, I wouldn't focus on whether the index moves another 1% higher or lower. Instead, I'd watch three things. First, does crude oil remain stable? Second, do monsoon conditions improve? And third, are there any meaningful developments in India's ongoing trade negotiations? Because these three factors will tell us much more about the market's medium-term direction than the daily headlines. The biggest mistake we can make is assuming that every rally marks the beginning of a new bull market, or that every correction signals the end of one. Markets are constantly repricing risk. This week, geopolitical risk reduced. The question now is, can domestic growth remain strong enough to justify current valuations? Something worth tracking over the coming weeks. See you next week.